All right, what is going on, future me? Want to obviously get into my pre-market plan for this coming week, as I do with every week. Just jump straight into it. We do have the daily for the dollar pulled up on the screen. And again, just kind of get straight into it. I mean, nothing super crazy to cover. The NFP numbers this week did come in a little bit hot. I think like sub 300K or something like that, which is why we have such a crazy candle, a bounce from this level of structure around 103 sort of 60 area back into upside around 105. But just outside of that, I want to look at kind of the bigger picture. In that, as I was mentioning, the move to 105 more or less is programmed. That's pretty much what we saw, right? We saw the move into 105, right? Stopping up at around 104, sort of 70 in confluence with the 786 as we currently see. This is a level, obviously a bouncer break level that I've mentioned multiple times. I would be expecting a knockback from. And obviously looking at, the way we ended the week off with this most recent daily candle close, I wouldn't be surprised either if we saw a similar sort of price action as we saw looking left right here, just because there is a little bit of traffic. So we might see, price play around, make sort of a little consolidation range before a move down, or even maybe a breakout to the upside, right? This is still a bouncer break level as it currently stands. But generally speaking, from a technical standpoint, the way that I'm looking at it, this is sort of a lower high. We saw a very clean long wick rejection to the upside in confluence with the 618, or in confluence with the 786, in confluence with this level of resistance, a sort of SR zone. And so obviously looking at it from that perspective, you would only expect downside into the 382 and potentially lower than that. There is a lot of news, not even a lot of news, only two real big news events coming out this week. First, on Monday, we have ISM services, PMI, and then on Thursday, I believe there is unemployment claims again. Oh no, we had unemployment rate on Friday, so unemployment claims on the coming Thursday. And as I always say, right, that, those news events can obviously act as catalysts for volatile price action, so that's definitely something to look out for. Definitely like a slower news week rather than what we've been seeing the past couple weeks, though. So I think it's a little bit of a breath of fresh air not to have to keep track of so many, economic press releases and all these different things. So that'd be great. So moving on from the daily, let's take a look at the weekly. And something that I did look at and observe in my pre-market sort of analysis is how we're obviously more local price action. We do have the reclaim of 103, this very big monthly level, and a very big push with momentum back into, again, previous resistance that we broke out of around 105 sort of area. 104 sort of 70 on daily time frames and lower than that. And so obviously we have all this different sort of momentum in previous weeks. Most recent weekly candle close, though, does sort of hint at a potential lower high being formed here, because as we can currently see, right, clear as day, looking left, like we have a high here, or even if we started it more locally, we have a high here, a low here, lower high, lower low. This could potentially be the next lower high, right? And break and reclaim back below 103 if that's what we're going to see. Obviously, I've been of that same sentiment just because of all the rate hikes and everything else. I think the bigger answers, though, were received around whether or not we'll see further downside for the dollar is what the Fed says around the rate hikes. I know that they've been hinting at potential pauses and everything else, so that's something to kind of keep an eye on and keep sort of an ear on, really, to see whether or not Jay Powell is really serious about pausing rates because of all the tightening credit conditions or whatever he says, or if they're going to continue with rate hikes to get a further handle on inflation. And CPI is next week as well, so that'll be good. That'll be a good indicator of whether or not we actually pause or what have you. So just an observation there. This is still a clean reclaim of 103, but honestly, I'm leaning more towards the daily time frame to see exactly where we fall, just because, again, we did get a very clean rejection off of that previous sort of level of support turned into resistance around this sort of 105 general area, obviously in confluence again with that fib, the 786. Hope that made sense. So looking at this on the monthly, obviously it's a brand new month, so not a ton to really gather here or sort of add any sort of context or anything of that sort. So again, I'll be leaning more towards the weekly and primarily the daily to sort of guide me in the dollar's next sort of movements. Moving on to JPYBasket, much more clear. I would say everything's pretty much moving in track and in line with everything that we've been saying the entire week and previous weeks. As we can currently see, very clean break and retest to end the week off, back into 75, sort of 30 area and lower. As we get into the weekly, this will become a ton clearer. But again, I just want to highlight we had this big leg up, sideways accumulation, and now we're seeing the correction of that, the move back down. So it should be pretty much programmed that we again move back into range lows around 7200, 7220 sort of area. At least that's what I'm going to be expecting before we see any sort of bounce. We could even move lower than that and create lower lows on a higher time frame. So overall, just very clear and of the sentiment that I will be expecting further downside for the yen, which should be working in our favor if the pound can cooperate. Looking at this on the weekly becomes even more clear. We had very long wick rejections to the previous range low before moving obviously into the 7200s, the new sort of range low that we're tracking here. Something I want to highlight as well is that as we see in previous candle closes, weekly candle closes, we see a lot of higher or upper wick creation early in the week before the move back down, and that obviously goes hand in hand, excuse me, with retraces and retests of previous levels of structure that we're seeing on GJ. And again, I'm highlighting that typically happens early in the week, right? So that's just something future me to take note of, just because again we do see those sort of retracement and moves back into previous structure before the actual move starts to play out. Like I've been seeing a lot of my plan playing out more, like later in the week, end of Tuesday, mid Wednesday, more so on Thursday type of thing. So I just want to highlight that for my future self, excuse me. So once again, just as far as the weekly is concerned, just really confirms further downside as far as I'm concerned with JPYBasket. As we can currently see, big wick projections to the range low. Next sort of stop and level, we have a microstructure here at 7300. Not really considering that too much because we have a very clear range low or new range low at around 72. And so yeah, so with that, I would be expecting the further downside to 7200. Looking at it on the monthly becomes a ton clearer, even though it's so early in the month, right? We could, the same way I just mentioned this on the weekly, we could kind of count this as potential lower wick creation. I'm going to kind of scratch that only because of how clear structure is looking on the weekly and daily. Like, I don't know in what world we wouldn't see further downside looking at price action like this. I mean, we could pull out the local sort of fib here, swing low to swing high, and make a case for the 786. Also kind of lines up a little bit with where is this, the sort of microstructure that we're seeing here around 7300. So I mean that could be in the cards, but once again, the way that the chart is just looking, I would expect further downside all the way into the new range low at 7238. So I hope that makes sense. Looking at the pound, and something I want to highlight here as well is that I feel like I talk about this every week, but generally speaking, I like for the pound and the yen to stay decoupled as indexes and just currencies in general. So when these two charts are moving in different directions, that is to our benefit, right? We are typically seeing a trending market rather than a range bound sort of choppy market. Although I do play range breaks, I like to obviously see the market trend thereafter, after the range break type of thing, not just continue to move into another range. So with that, one observation that I did make is, although we did end off the week with a bearish move, obviously a bearish engulfing to the downside, we are still playing around above 124. Earlier than that, to start the week off, we actually ended up reclaiming levels above 124, which is a good sign for the pound, at least as far as pound strength is concerned, right? Although they might not move all the way, opposite of each other, if we are seeing strength on one particular chart, in this case the pound, and clear weakness on the yen, that's still sort of passable, right, for further longs on GJ. Because once again, the pound as we currently see it is respecting certain levels of structure that in the past have acted as support, as we can see looking left. So as long as we're above 124, to me, it is a good sign to see further upside, whether it be to 126 or just general, even if it chopped around in this range while we saw clear downside on the yen, that would still be to my benefit. And so that's how I'm going to be playing it, because although it looks great on the daily, more or less, like, take it with a grain of salt, the weekly doesn't look so good. one thing I do want to highlight, because from a local sort of perspective, we do have sort of higher highs and higher lows being formed here. I'm not going to necessarily call this a lower or a higher low just yet until we see some sort of stability at or above the 618, because again, resistance is still resistance in confluence with the 618 here as well. So you typically see a knockback and continuation to the downside. And I would add a little bit more conviction behind that, especially because of the most recent weekly candle close. Look at the wick on this to the upside. It's generally rejecting and obviously not closing above the 618, right? So things like that are a bearish sort of sign. But once again, I am of the same sentiment that as long as we are staying or at least ranging and consolidating above 124 and seeing clear downside on the yen, then I'll settle for that, right? I would obviously love to see this thing like skyrocket to the upside while the yen goes into an opposite direction, but I'll take what I can take as far as that's concerned. Looking at this in the monthly, super early still. Obviously had the bearish sort of candle to end last month off, and so once again, super early in the month to really tell. We're going to be using the weekly and daily to add a little bit more context around that into the coming weeks. But the general idea is that either we see the continuation to the upside or we see this sort of arrow play out where obviously we have this break of structure of this liquidity zone looking left and now a retest. We might be just in the middle of making that retest sort of structure into 121 before making the continuation to the upside. So I hope that makes sense. Once again, as long as we're above 124 as far as the pound is concerned, just to put it simply, I am looking good as far as GJ loans are concerned. As long as again we're seeing clear yen weakness, not sort of consolidation, and the opposite of that on the pound. Again, I would love to see this trend upward and the yen downward, but if we see clear weakness of the yen, and even if it starts to bounce around in between both 126 and 124. I would, obviously it would depend on what we're seeing on GJ, but I think that would be passable as far as wanting to take loans is concerned. Hope that makes sense. So moving into the pairs I'll actually be trading for the week. Let's start with GJ. All right. Let's start this in the monthly or the weekly. So weekly looking extremely bearish. Right? Like, who would not want to long this chart? Obviously, we have a very local level of structure around 175 sort of 30 area that I'll be on the lookout for. Also we're sort of developing a new range here as we're in price discovery or local price discovery, whatever you want to sort of call it. We have obviously a new range low here at 168 that was previously a range high, a new range mid here that is also a local level of structure previously held as resistance, now blasting through and potentially going to be retesting as support around 171-10 sort of area, and a range high that we have yet to test at 175 sort of 30. So definitely a very important sort of range from 171 into the 175 that we're moving into as we currently speak, because now we're going to be finding out where true resistance is, and we can be marking that off as we move into the coming weeks. So that's going to be exciting. But overall sentiment, obviously we're moving up in a straight line, right? We have to see a retracement at some sort of point in this, but we are still bullish above certain levels, namely 171 and obviously most importantly 168, right? Those are acting as very big levels of support on intraday time frames. We can even look at this in the daily. And the daily, right, does make it a ton clearer as far as where our areas of interest will or should be into the coming week, even as we start to see the most recent daily candle close start to lose a little bit of momentum as we move into 175, that level of resistance. But something I want to highlight, and something I feel like I highlight all the time when I'm covering this, is that we are still making higher highs and higher lows. I feel like I go through this all the time, but it's very clear. Obviously, we have a high, low, higher low, another higher high, another higher low, and now we just end the week off with another higher high. It's only right, even if we make this move all the way into 175 before we make the move down, it's only right that after seeing this sort of price action that we see a retracement, a higher low formed. Where should that happen, right? There are two very big areas of interest. First being 172, the sort of range between 172 and 171, sort of 19-20 area. And then a much more deep retest, which I don't think would be as practical, but would still be valid structurally speaking at 168 sort of area, where we saw this last retest. But again, I am of the sentiment that the higher low just makes a bit more sense and would be, perfect world would look the best right here between 172.12 and 171.20 sort of 19 area. We could even fib this out, right? Let's take a look. I can take this all the way down here, bring it up here, makes a case for, again, the 168 sort of retest. More local levels, we have the 382 at 172 sort of area. I wouldn't necessarily consider the 618 unless it's sort of wicked into this area, which would be valid. And then we have a very local level, again, affirming 172 as a local level of support that we could potentially be retesting sometime in the future. So again, I'm still bullish, but it does look like we're losing a little bit of momentum as we're moving into levels of resistance, namely 175. Always becomes a ton clearer on the 4 hour and 1 hour. As we can currently see, something I want to highlight off of my previous pre-market plan, exactly what we were waiting for played out, right? We had the sort of last kiss, we had the bid breakout, price came back, kissed the box, very soft kiss of the box, and made the move higher, and made obviously a higher high here. Again, same sentiment, we have a high, higher low, a new higher high. Where could we potentially make a new higher low? A couple of very big levels of interest. We obviously have this old range high that we recently broke out of that can be a very shallow sort of retest at 173.80, which I would consider, but wouldn't be like practical for me necessarily. It'd be very risky. Perfect world, I wouldn't take that. Perfect world, right? I would wait for either 173, this retest of the range mid, or best sort of entry and best option in my particular opinion would be this sort of double bottom structure potentially at the 618 and obviously the most recent level of structure, right? Typically when we see breaks and retests, as we saw back here, we make a retracement back into the level of structure we broke out of, and that's what I would expect, right? We broke out of here, 172 sort of 50 area, came back, retested it, made a move higher. Again, most practical retest for me again would be at 173 area, or perfect retest at 172 sort of 50, 172.45 sort of area. That just makes the most sense, once again, because we have a very solid level of structure looking left here. Also have the 618 here as well. If you wanted to make it a little bit more local, just to make a case for the range mid that we have around 173 area, we do have a 618 and 786 confluence with that sort of range mid level. But again, this is the 4 hour, so I wanna stretch that sort of the fib out from a local low where we recently broke out of the box into the new high that we just formed, and it lines up perfectly at 172.50. So once again, two big areas of interest for me as far as retests are concerned, and longs, 173 and 172 sort of 50 area in between this sort of range. More risky, less practical retest is the shallow one of the range high. If it looks good, you know, if it has a rounded bottom sort of deal, long with projections to the downside, I would consider it. But look at the way that this 4 hour candle close looks. Absolutely disgusting. Absolutely disgusting. Moving into the 1 hour becomes a little bit clearer here as well when I talk about the 4 hour candle. It just makes the most sense, right? Look at this local fib, this swing low to the swing high. We have a perfect 786 and 618 confluence here for retests and retracements. So once again, of the sentiment that I would be waiting for these levels to be tested before the moves higher, as these arrows clearly state. Also have this very fickle trend line here, right? We see this all the time, either the squeeze and move higher, or the eventual sideways consolidation and break back to the downside. So I would want to be playing this level to level. If we see this level at 173.60 in confluence to 618 retested as support, and we see clear strength above it, I would take longs back into 174 and higher than that. Also, other side of that, I would also be considering shorts into lower levels of structure that we can potentially bounce from. Again, I'm of the bias that we're going to be seeing longs, but this move will retrace, so I want to catch it in that time, right? Whether it be taking safe longs from 173.60, or I would, on the other side of that, I would take shorts into the levels of structure I'm wanting to see retested, because again, they have one of these levels of structure is going to be retested, and when it does, based on the reaction, I could take longs. But again, if we see, like, so for example, we see clear weakness at 173, I would then take it into, or 173.60, I would then take it into the next level of structure, 173.06. And if we see clear weakness, the sort of last leg, the last and the bouncer break sort of area would be 172.50, right? I'm taking longs here all day, every day, just because, again, that is in confluence with the 618, as we see back here with the sort of the last kiss retest. That was this area on the 4 hour, right? This was the last higher low, right? And the sort of strongest level of structure as far as I'm concerned. Look at all these weekly candle closes here as well. Just makes a very big case for this being a very solid level of structure. So once again, if we don't bounce from 173.60, I would take sells if it looks good enough from 173.60 into 173 and potentially lower than that, max 172.50, in which case I would want to then take longs because, again, this is a very solid level of structure. Unless we see clear weakness, very clear disrespect of that level of support, then obviously I would probably think otherwise. But that's my plan for GJ. Very, we closed pretty much in a range mid, as we can currently see, very clear. We have a range low here, a range mid, and a range high at 174.60. It would only make sense for me to want to take longs at 173.60 and make moves higher than that. Obviously, other side of that, if this range low becomes a new range high, a new level of resistance, I would want to take shorts and move back into the range lows, in which I would then reconsider and potentially take longs. So, hope that makes sense for my future self. Let's take a look at gold. Oh man, gold bears. Yeah, gold bears killed it. All right, so let's look at the weekly really quick. I just want to say, or monthly rather. Let's look at the monthly. Monthly looks extremely bearish, as I said last week. As we can currently see, right, we have a very clear triple top, very clear level of resistance and structure, as we can currently see. And every time that we moved into this level of structure and rejected from it, look at the moves that played out thereafter. Very big and dramatic moves to the downside. So what would make this particular case any different, right? I'm expecting the same sort of downside that we saw looking back, looking at history, because that's what we have to work with. And so one of the biggest sort of confirmations for that for me would be making breaks and moves back into and below the 1930s. That is a very big level of structure as far as the daily 4-hour concerned, and we'll get into that here in a second, right? Or maybe we see a potential bounce from here, something that I'm not necessarily expecting, but with the dollar weakness that we're going to currently see, right, we're bouncing off of a level of resistance as far as the dollar is concerned. If we start to see rejections there and weakness as far as the dollar, the only logical sense would be to see gold strength, right? You see dollar weakness, you then see other sort of assets like gold go up, right? Although technically speaking, it does not look like that move is going to play out, right? It just, it's a tough sort of pill to swallow. We would need to see continued dollar downside, right, to see gold make a move up, and we would need to see dollar upside, in my particular opinion, to see this move to the downside, right? And obviously all these different talks about the pausing rates and all these different things, it makes a bullish case for the dollar, this whole thing. We're just gonna have to see, again, we'll get a very big clue around that next week when CPI numbers print. So I'm going to leave that there. So moving into the daily, as far as local levels are concerned, I covered this last week. We have obviously a higher high and higher low structure that is just has just shifted into a high low lower high sort of structure. We can even move this over just so it makes a little bit more sense. Boom. We have a high, low, and lower high. Very clean rejection of this previous level of structure, obviously held as resistance and support at one point, and has now been retested as further resistance. Also, in confluence with the 382 here at this sort of local fib level, and made moves back below 1959. I did say in previous pre-market plans that 1959 is sort of a bouncer break level before moves into the 1930s and 1900s, and that's exactly what we're seeing. And obviously, seeing as this is a new lower high, the only logical sort of move thereafter would be a lower low. So I am expecting the break and move below 1940 from a daily sort of perspective, especially with the amount of momentum that we saw to end the week off this last week. The only thing that would disprove that to me would be reclaims back above 1976, 1980 sort of area, because as we can currently see, it's holding as a very local and respected level of support, or of resistance now, previous support. Otherwise, right, I would again look for shorts into the 1900s. Looking at this on the 4-hour becomes a ton clearer. As we can see, very clean resistance. We have now a sort of a triple top, we can kind of call it here, at 1980. Again, pointing out the fact that 1980 is a very well-respected and strong level of structure, especially looking left, right? Like, look at all this support that we garnered here, and then now turning it into resistance. Obviously, as far as the current week is concerned, would expect, honestly, the move into 1932, as we can currently see. The only sort of level that I guess price would stop up at is this local level here around 1939. and potentially want to make moves and retest back into 1959 before moves lower. So that's something to consider here as well. I'll leave this little line here as the week develops. But again, as far as where we currently stand, I am expecting to move into 1932. I would take breaks and retest below 1932 all day, every day into 1900, 1905 sort of area. I would also wait if we did bounce off of 1932 or this micro level, micro structure here at 1939. I would take the retest, the break, and or rather the bounce and retest of resistance here at 1959 for shorts, right? So just for example's sake, right, we get the move back here, or even move a little bit lower. That is a sort of 618 confluence, right? I would wait for the move back into 1959, potentially even a little bit higher than that, wait for wicks and move lower, just to give a sort of working example around that. Once again, just to be all the way clear, a couple areas of interest. The 1959 retest, I would take all day, every day for shorts. I would take the break and retest below 1932, 1930 sort of area and move into 1909 all day, every day. And lastly, I would take obviously the retest of the sort of bigger resistance at 1980 for shorts all day, every day. Looking at this in the 1 hour. Becomes it's unclear. We did close within a range, obviously breaking below this sort of range low between the range mid at 1969 and the range high at 1980. So again, it does add a little bit more context for me, at least, to want to see a retest. As we can see with this little arrow here, I would wait for the move back into, I can delete this. I will make the move back into 1959. I'll wait for that move before getting short into 1932. Other side of that, as I mentioned in the 4 hour, I would consider the break and retest below 1932 into 1910, 1905 sort of area all day, every day. Once again, the 1 hour does add a ton of context. It also adds one more level of interest. Of course, first I have this first level of resistance in 1980 that I would consider shorts from. I would also potentially consider 1969 as a level of resistance, because this could end up developing as a local level, a local sort of 618, as we can currently see. Right, like if this didn't make any more sort of downside, if this is the end of the sort of rounded bottom, this would be the 618 at 1969. So again, that does add one more area of interest to potentially take shorts from. Perfect world, again, I would wait for the 1959 retest and move lower. So this is, again, there are 4 areas of interest. First, 1980, second, 1969, third, 1959 retest, and fourth, the break and retest below 1930. 1932 sort of area. As we can currently see, this is a local sort of level of support. Also looking further left, as was a very strong level. Obviously, we can see that as well by all of the weekly candle closes here as well. So once again, I would need to see a clear break with strength below that level to consider shorts at or below that level. So I hope that made sense. Pretty simple and straightforward for my future self. And that pretty much sums it. Yeah. It's my pre-market plan, and I'm sticking to it. Future me, God bless you, bro. I love you. Hope you're, living your life to the utmost potential, doing your thing, as with every week, every day, every month, staying consistent, disciplined, and profitable. And yeah, God bless you. God bless everybody watching, and take care.